There's a lot of talk about the housing market and the imminent crash, prices too high, affordability out of whack, all that. This video is not about that, but the next thing that people think about when they hear those kinds of comments is distressed properties. A distressed property is a property that's at risk of foreclosure or has been taken by a lien holder in a foreclosure proceeding. YouTube is a great resource. You can search for just about anything and get a list of videos on that topic. I assume you found this video either because you're interested in learning about short sales and maybe there's an opportunity to buy and you're looking for a great deal, or you own a distressed property and you're wondering if a short sale is an option that you can pursue. Either way, this video is for you. I cover a lot of ground here, so I hit the high points. Reach out if you have specific questions. You can call me, email me, or you can throw some comments down below and I'll help you out there as well. If you are facing a foreclosure or you need to do a short sale for some other reason, please get in contact with someone who has experience. There are a lot of requirements in order to do a short sale. If you make even one mistake, you can be back at square one. If you're facing a foreclosure and trying to do a short sale, you may not have time to go all the way back to square one. When a property is at risk of foreclosure, that owner has a lot of different options if they start early. Those options include a refinance, a lender workout, forbearance, a loan modification. They can sell the house and bring extra cash to closing. They can do a deed in lieu of a foreclosure, a short sale, and then obviously the last bit is foreclosure. It's 8 different options. Going into each one of those options is going to take way too much time, and it's not the purpose of this video. If you do want more information on those options, please comment down below and I'll be glad to put videos together for those. This one is focused on number 7, the short sale. A short sale is a property sale where one or more lien holders agree to take less than what the borrower homeowner owes them. This occurs when the homeowner sells the home, number 1. They can't get enough for the sale to cover the liens that are against the property, number 2. And number 3, they don't have enough cash to cover the difference themselves. You may be wondering, what is a lien? A lien is a legal claim against a piece of property when that property has been used as collateral for some type of debt. When you get a mortgage on your house, the bank goes down to the local land records and they file paperwork on the land records announcing to everyone that you have a debt to them and they have a lien against your property. Other types of liens includes tax liens, mechanic liens, and even judgment liens. Typically, the short sale is not the first option. It's usually the last option right before foreclosure. There's a couple reasons why it's the last option before foreclosure. The first one, the lender, the lien holder, they don't want to take a haircut. They want their money. They're going to push the homeowner to go through as many options as possible before approving a short sale, and then only if certain criteria are met. The second reason that it's right before a foreclosure is, unfortunately, a lot of people, when they get these notices that they're behind on payments, they ignore them. So they end up wasting a lot of time and end up in a situation where they don't have enough time to take advantage of any of the other opportunities. It's either a short sale or a foreclosure. Needless to say, a short sale is going to be very stressful for a homeowner. My advice to you, if you're a homeowner in financial distress, contact someone who can help you out and guide you through the process. An accountant, attorney, a real estate agent who knows the short sale and foreclosure process, someone who can give you some advice. You always have options. The longer you delay, the fewer options are going to be open to you. A short sale will have a negative impact on your credit score. It's nowhere near the impact of having a foreclosure. Let's take a look at a short sale from the homeowner-borrower side. I've already covered the definition, but I'll touch on it real quickly again. There's 3 main elements. You're selling your home. The proceeds of the sale don't cover the liens on the house. And as the homeowner, you don't have enough cash to cover the difference. Each lien holder has specific criteria for a short sale. To be considered, you need to start with the following. As I said earlier, proceeds don't cover the sale. You have to have a valid financial hardship, and you have to determine if you have the time to complete the short sale. You can't just decide to do a short sale. There has to be a valid reason why you're not going to stay in the home and just pay down the debt. Some valid reasons include loss of employment, loss of hours or underemployment, 50-plus mile job relocation, business failure, illness, health insurance costs, divorce or death of a spouse, increase in mortgage payments, or natural disaster. Some examples that are not valid reasons for a financial hardship: loss of equity in the home, desire to move to a larger or smaller house, increase in family size, or excessive discretionary spending. Each lien holder has its own process that must be followed. The general process is determine who owns the loan and who services it. Maybe two different entities. Does the loan have PMI? Then the borrower signs a release of information form, request, complete, and return all the documents from that lien holder, verify borrower hardship, the financial hardship I talked about earlier. We submit a hardship letter, list the property and market the property for sale, negotiate a contract with the best buyer, and then submit that contract to the lien holder for approval. A couple of key notes here. The borrower seller is not the final decision on that contract with the buyer. The lien holder reviews and approves it. Some lien holders require paperwork before listing. Other lien holders require a contract before they initiate the short sale. The third thing is lien holder review times can vary. They could be 30 days, 120 days. It depends on that lien holder. Insurance approval may be required if the loan has PMI, which might potentially make that review process even longer. Once you understand your lien holder's process, you have to estimate how long it will take to get completed. And this is where that third requirement comes in. If you don't have enough time to complete the process and complete the sale, and the lien holder is not willing to delay the foreclosure, a short sale may not be an option. Unfortunately, once the foreclosure process is done, that borrower owner doesn't own the house anymore. This is true whether it's a strict foreclosure or a foreclosure by sale. This is why it is so important to contact a real estate professional as soon as possible if you are at the risk of defaulting on your mortgage. Assuming the lien holder approves your short sale, they will issue a letter detailing the conditions and acceptable terms. Make sure you review and understand that letter completely. Ask questions if you're unsure what something means. Your attorney and agent can help you here. Dates are often time is of the essence, so be aware of that. The buyer will need to be ready to close very, very quickly after the approval is received. Extensions can be requested, but they are by no means guaranteed. Your attorney will work with the buyer's attorney to get all the paperwork in place. You'll sign on or before the closing date and ownership will transfer. The lien holder will release the lien. Your attorney will make sure that the lien holder also releases the note that obligates you to pay the debt. If they don't do that, then you are still obligated to pay that debt. And in the state of Connecticut, the lien holder can request a judgment lien against you in order to collect the debt. If they don't approve the contract, then you have to go back and renegotiate with your buyer or find another buyer that is acceptable to the lien holder. That's kind of how it works on the seller, the homeowner borrower side. Now let's talk about what it looks like if you're a buyer and you want to buy a house that is in a short sale situation. As the buyer, you're stepping into the process after the house has already been listed and it's being marketed. If you've ever been in the military, you know the term hurry up and wait. It applies here with short sales. The owner borrower, the seller, is typically under pressure to get a contract as quickly as possible. The lien holder, on the other hand, has a process to follow, and they may or may not be in any kind of hurry. And this is all happening with the specter of a foreclosure looming in the background. Here are a few things you understand about a short sale as the buyer. You're not in control. You must understand the process and that the lien holder is making the decisions. The second thing, proof of funds or a pre-approval is still the ticket to the dance, just like any other deal. 3, properties are sold as is. The owner borrower, they don't have any money to fix anything, and the lien holder's not going to be interested in spending more money on a deal that they're already losing. Number 4, Hubbard clauses are a no-go. It's too much risk for the lien holder. They're not going to be interested. Number 5, any inspections or title work should be done as soon as you have the contract signed by that homeowner borrower. Don't wait for the approval from the lien holder. The lien holder is going to give a date when they want everything closed. It may be time is of the essence, and they may not allow time for that inspection and title work to get done. Yes, that does mean you may be putting some cost at risk, especially for the inspection. That's something that just comes as part of the deal. Number 6, odds are low that you're going to get closing costs back from the seller. The exception here is if it's a HUD loan and you're using an FHA as a buyer, you might be able to get up to 1%. That's something that you got to talk to your lender about. Number 7, this is not the time to lowball. The lien holder is going to make sure that the offer is market value, and they're going to reject it if it's not. Number 8, the seller is also not in control of the review and approval process. Patience is a virtue here. This is not the type of deal you want to do if you're on a timeline. Assuming the lien holder approves the short sale, the attorneys and your lender will get together and get all the paperwork in place. They'll schedule a closing, you and the seller will sign paperwork, and you'll take possession of the property. If you finance the property, your attorney is going to file papers on the land records showing that there is a lien on your property from the lender that just gave you the money to buy the house. I've guided buyers and sellers through the short sale process. Flexibility is the name of the game here. In normal transactions, one side, the buyer, the seller, is going to have some level of control depending on the market conditions. Short sales are different. Neither the buyer nor the seller really has a lot of control. The control really rests in the hands of the lien holder. Short sales are a great opportunity if you have the time and patience to work through the process. Work with an experienced team who can guide you through the process and help you to avoid the many pitfalls that are out there. Hopefully this is helpful in getting to understand the short sale process. I'm Dave with the Bolduc Realty Group. Have a great day.